with your 1 p.m. market update for Monday, the 5th of December. Personal Market Club coaching. Here we are. It's the end of the year. And maybe you've had a good year, maybe a tough year, who knows. But you can give us a call, a free call, and a free consultation and see if Market Club coaching is right for you. So the number is 877-219-1482. So give us a call. Maybe the best thing you can do for yourself as we go into 2012 and get prepared for some great markets we see there. We have a couple of things today. We've got 2 ETFs you may want to put on your radar screen for 2012. You know, last week the equity markets put in a powerful upside performance, and today that same momentum is following through to the upside. The big winners, of course, are the financials that look like they may squeak out of this whole mess alive by the skin of their teeth. The trends, and by that I mean the major trends, have not reversed for the major markets and have not been confirmed to the upside. Today we'll be looking at the charts and pinpointing the professional turning points for each of those major markets. We'll also be looking at 2 markets that we shared with you last Friday that were making 52-week highs. The 2 stocks we looked at were Kinder Morgan and Morgan Stanley, so we'll be looking at those charts today. Lastly, we'll be looking at 2 interesting ETFs that you may want to put on your radar screen for 2012. You'll find those very interesting. Now let's go to the charts and the video and see how we can create and protect your wealth for the balance of 2011. So give us a call. The number, it's a free consultation, free call, so 877-219-1482. Love to hear from you. So let's go to the portfolio, and here right away you can see the S&P 500 now plus 70. Now plus 70 in our system is basically a potential emerging trend, and you can see that on our blog posting today. And here we have the S&P 500. You obviously had a big rally here, not dissimilar to what happened in October. We're getting back up to the areas it's going to probably find resistance. In that level we're looking at is between 1280 and 1300. So this is where we expect. I'll just put my telestrator on here so I can give you an idea. So this is where we would expect to see the market have problems, right between this level right here and this level right here. So this is between 12, this is 1300, and this is 1280, which you can clearly see right here. So we're getting very close to those areas. Tomorrow, perhaps, if we have another pop to the upside, which would have to be a pretty good pop, another 15 points to the upside, I would say probably it may have run its course for the time being. But nonetheless, the trend, at least the intermediate term trend, is still positive, while the longer term trend, which is right here, remains negative to the downside. So not unusual to see a counter trend rally against the major trends. We saw that happen and take place right here. We had obviously a very big move up, didn't change the longer term trend. The market came right back down. Maybe we're in a transitioning phase. I'd say with a plus 70, you're basically going into an emerging trend. Whether that trend turns out to be a positive trend, we'll just have to give it a little more space in that market. So let's take everything off the screen, go to our next market. In the next market, it's kind of like a little bit like Groundhog Day because it really hasn't gone anywhere, and that's the spot silver. Now spot silver, when we checked this earlier, was running at minus 65. Well, it's now minus 100, which is pretty interesting. But nonetheless, all the trends are still down. We must have lost some ground here before we wrote this before. But that's a downtrend, clearly minus 100. Indicating the pressure is on the downside. But for the most part, you can see clearly this market's sort of gone sideways and really hasn't had a strong trend either way since the end of September. So I think you want to probably stay away from this market for the balance of the year. I just don't see anything happening. However, 2012 is coming around the corner, and it could be some very interesting plays in this market. So let's maybe put it on the shelf for the balance of this year. As I say, we're going to get into silly season in about another 10 days. It starts on about the 15th of December when things get very thin in the markets, and you want to pay close attention to that because you don't want to be taking big positions because of the thin and illiquid markets that tend to come in at that time of the year. So going to our next market, and this is gold. And gold is kind of interesting for us because we see this. We are minus 50 was basically a trading range indicating the long-term trend still is up, the intermediate-term trend is down, and the daily is down. So what does one do in a situation like that? Well, if you're a long-term trader, just hang on because you've seen the ups and downs that can happen in gold, but you're still convinced based on our trade triangles and your own conviction that gold's going to go higher. If you're an intermediate term trader, you should either be short gold or on the sidelines right now. I think the best thing probably is just to be on the sidelines because it's so late in the year and you're not going to get a lot of play coming into this market. But minus 50 means it's a trading range. If we scope this down, you can see we've just turned down from a very overbought situation. The MACD, the MACD, is practically flat, so there's just less and less interest in this market at the moment. But however, in 2012, I think we'll see a lot more interest coming into this market. I'm not sure what the catalyst is going to be, but certainly if we see the market go over 1,300, it's going to get a lot more upside momentum, which is what we need to drive prices higher. And that's going to be driven by maybe Europe again. Maybe that's going to flare up and be a problem. One doesn't know at this point in time. The copper market basically is in, let's go to the next market, is the copper market. And that's an emerging trend. So we have it was an emerging trend. It's plus 60, meaning it's a trading range right now. So you're sort of trapped. These numbers are very close, so they keep popping back and forth. But generally speaking, the Donchian trade channel, you can see how it touched there, just much similar to what it touched here. I would not be surprised to see some sort of pullback. In this market, we've been going sideways for the last sort of 4 or 5 days. But certainly there's no real strong upside momentum at the moment here. I don't think we're going to see that. I think the markets are getting thinner, and I think we'll maybe see some, maybe more sideways action, maybe come down to 350, maybe 340, but I think you just want to give this market a berth. We are overbought. We do have a positive Donchian, a MACD indicator. The PSR is positive. However, our longer-term trade triangle is not positive. Shorter-term, intermediate, short-term, daily, intermediate term, weekly are positive in this market. So generally speaking, it's a conflict, a trading range, and I think you should be somewhat careful with that market at the moment. So going to our next market, and that's crude oil. Crude oil is plus 90. It was plus 100 earlier on today. Continues to make highs, obviously acting very well. Strong trend, one of the strongest trends we have right now on the board. And you can see we're just sort of flattening up to go a little higher on the MACD. All of our indicators, the daily, the weekly, and the monthly, remain positive on this market, indicating we should see higher prices. So that's what we're looking for in the crude oil market. And maybe it's something that's going to happen in the Middle East with Iran, Iraq, Egypt. Who knows what's going on over there. Egypt certainly controls the Suez Canal, which is a major item when it comes to oil. So let's see how that plays out. Let's go to our next market. The next market is the dollar index. Now the dollar index is sort of hanging in there just above the 78 level. This 78 level is very important in my book. I think if we close below there, we could see a market come down to the 77, 77 and change, 76 and change. But for the most part, it's still a positive trend based on our monthly and intermediate term trade triangles. However, they need to start regrouping to go higher, and it may take a while because it's the end of the year. We are, however, getting into start of a down oversold condition. The MACD is turned down, so you've got a couple of weaknesses there. We may stay in an oversold condition like we did back in October for several weeks, several days, several weeks. And also, as I say, but it looks like we're making a consolidation at a higher level here to possibly go higher and resume its upward trend based on the monthly trade triangle. So next market is going to be the Reuters Jefferies CRB Commodity Index. Interesting market, negative on Friday. We've had no follow through on the upside today, so like you have a doji line here, possible indication of in the equilibrium between buyers and sellers. But nonetheless, you had this may be the third. Depending on how we close today, I would say if we close below 313.47, we're 314.72, so about another 1 point lower. This would begin to look very suspect because it would confirm this is a dark cloud cover, this particular indication. And let me just explain to you what a dark cloud cover is for those of you who don't know. Let me get my telestrator on here. A dark cloud cover is as follows. When you have a market in a candlestick formation, and this is the line I'm referring to, is right here. If you have it, it has a higher high and a lower low. Gives the red box right here. Now, if it confirms, if it closes 2/3 down the previous box, like it did on Friday, That's called a dark cloud cover. I love the names of the Japanese candlesticks. And this is a doji line right here, and that's spelled D-O-J-I. And that tends to be an equilibrium between buyers and sellers, but however, depending on how it closes, it could well be an indication of a trend reversal going on right here to come back down. So let's see how that plays out. Very, very interesting. If you want a copy of a Japanese candlestick book that we have here, give us a call. I'll be very happy to send that out to you. So let's go to our next market, and let's just clear the screen a little bit first of all. And simple to do. And we'll go to our next market. And that's going to be Kinder Morgan. Now, we looked at this market on Friday with a 52-week high. Closed at a 52-week high right here. Didn't close particularly well, but it was a 52-week high. And right now we're up 24 cents. Not a lot, but 24 cents is actually up quite a bit higher. It's opened at 31.50, traded as high as 31.97. So it's come down from the best levels, but nonetheless it's higher. So the idea with a 52-week high on Friday rule is basically you buy this market on Friday, and you'll sell it tomorrow on the opening. So let's see how that plays out. We're also going to look at our next market, which is Home Depot. And Home Depot, same plan there. We purchased it on Friday, and the purchase price is $39.96, and we're currently trading at $40.56. So it's up almost at 1.5% in a little over the weekend. So that's a nice little trade for us, and we'll be coming out of this market on the opening on Tuesday. That's tomorrow. So it's going to be a very short hip-hop move, and we'll see how that plays out. But those are the two markets we highlighted last Friday in our 52-week high rules. So you may want to follow that rule and see how it works out for you. Next markets, we're going to look at two ETFs that I think are very, very interesting. The first one is Market Vectors Russia, symbol RSX. And I'm going to scope this out just a little bit further because I want to show you, we talked about this pattern before. And I'm going to take everything off the screen because I really want to get this very simple so you really understand how you can look at this market. And I'm just going to put a very, very simple line chart on here, and I'm going to put my telestrator on. And this is what we're looking at for this market. Is we feel we're building a very large what we call this whole thing is like an energy field. So this doesn't refer to crude oil or anything like that. It just simply refers to a chart formation that we call an energy field. This, to us, is the potential of a left shoulder. This is the potential of a head. And this is the potential for a right shoulder, RS. Now, the important thing here, of course, is going to be this neckline. I'm just drawing this very briefly, but we may be being, if we break through this level here, then I think we've got a potential to see this market go quite a bit higher. Certainly we would be looking at somewhere in the 38 to 40 level, which takes us back to these levels right here. So I think that's something to look at very closely on RSX. Now RSX is in 55, a trading range. It's too early to look at right now, but certainly keep this on your radar screen because it could break out anytime, and when it does, you want to be ready for this market. And I think it's probably going to be in January. We want to pay close attention to it. But RSX, it's the Russian market, and what does Russia have? Crude oil and gold, two very important commodities that I think will be a big player in the 2012 market. So let's scope everything off the screen, clear it up. Go to our next market, and that's going to be the ETF EWZ. It's the iShares MSCI Brazil Index, and much the same pattern there is you've got the energy field we showed you on the last chart, and I'll just scope this in for you. You've got that's basically the left shoulder. You have a head right here, and of course, as we said earlier, you have a right shoulder right here. And the neckline, this is what's called the neckline. And I'm just going to draw it very carefully, as close as I can, freehand. So this is the neckline, And the theory behind this is when the market breaks over the neckline, then it basically, you can count from this point here to this point and to this point, and you simply measure up. In this case, you'll be looking at somewhere in the region of around 65 to the lows of around, let's say, 51. So it's about 14. So I think you're looking at 79 to 80, which would certainly be a nice move up from the current level. So put this on your radar screen for 2012. It's definitely a market I'm watching personally, and along with the other Russian ETF. So, hey, this is Adam Hewison. We've covered a lot of ground today. I certainly enjoy it, as always, talking to you and sharing with you my knowledge of the markets, my decades of experience. And our goal is to help you become a better trader in 2012. So if you want to give us a call in terms of our coaching, oops, I don't want to do that. Let me square everything off the screen. If you want to give us a call in regards to our coaching, then certainly give us a call at 877-219-1482. But you don't have to do anything. Promise me. You don't have to do a thing. So Adam Hewison from Market Club. I'll see you tomorrow, same time, same place, right here at Market Club TV. Thanks for stopping by.